Hello, welcome to today's edition of The Final Bar. We're going to recap today's market rally with the S&P pushing to new closing and intraday highs. In our mystery chart segment, I'm going to unveil a stock that you should probably be aware of. Also, a new segment called Holiday Sleepers. I'm going to pick 5 names that I think are sort of sleeper picks going into year end and into the beginning of next year. Ladies and gentlemen, this is The Final Bar. Hey everyone, welcome to today's edition of The Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in Redmond, Washington. Thanks so much for joining us today and every day after the close. Our goal in about 30 minutes is to wrap up today's price action from a technical perspective and connect it to the long-term trends. It's so easy to get caught up in the short-term movements of the market, and one of the best, most important things you can do as a long-term investor is keep a proper perspective and understand how the short-term movements fit into the long-term trends. So we're going to unpack a number of themes today. Stocks actually moving to new highs again, which is obviously what everyone's focused on in terms of what the longevity is of that run. I'm going to pick some sleeper stocks that I think might be interesting going into to the new year. Also talk about sector rotation, a lot of cool segments today. I did want to highlight the fact that I'm going to be speaking at the Market Vision 2020 conference. This is coming up on January 4th, which is the first Saturday of the new year. Tom Boley over at Earnings Beats, many of you know him from his shows on StockCharts TV, is hosting a fantastic day of guest speakers, many of whom you're very familiar with from the StockCharts family, including John Murphy, who is going to be the keynote speaker providing his take on the markets for 2020. So make sure you check it out. It's going to be a fantastic day, really worth attending if you can swing it. Let's get to the chart. So in terms of a market recap, further upside. So the last couple days, we've had sort of this digestion period. I kept mentioning yesterday and the day before, we're sort of digesting the previous gains. Today, we had sort of an upside follow through. This is where you saw further accumulation, stocks pushing to new highs, more of a drive to potential further upside. And so, if there's any question as to whether or not we're in a short-term rally environment, I can't imagine there would be. This certainly signaled a little bit further of an upside here. The RSI, which we've mentioned, right, this potential non-confirmation. My guest yesterday, Roman Bogomazov, had a really good chart using Wyckoff Analytics, talking about this potential, the accumulation in the market, but how it relates to this non-confirmation. And just remember, this is still an active chart, right? So if the trend continues, if we accelerate into the end of the year, this RSI can go even much further. I mean, it could show much further upside than it is. For me, this is the type of chart that goes on my watch list. It's one I want to keep reviewing and see if this non-confirmation sort of is confirmed. And that would be confirmed if the RSI goes back down below the 70 level. Has not happened yet, but that's what we want to sort of watch. But by any measure, I mean, there's no denying that the trend overall has been very positive. Let's look at today's trading, and you can see we've had more of an acceleration. This is Friday's session here, pretty volatile. Then Monday, Tuesday, Wednesday, essentially sideways, but giving back most of the gains into the close every day. And now we sort of see accumulation right out of the open, continued on into the afternoon, even into the close. We closed back up toward the highs of the day. So overall, certainly more buyers than sellers, more bulls than bears, suggesting further short-term upside. Wanted to spend just a little bit of time here on the Mindful Investor live chart list. As you know, this is the chart list that I keep track of, that I manage. One actually new feature you should be aware of: if you bring up this chart list on your own login, you're going to see a new button up here in the upper right, which allows you to save this chart list right to your login. Before I wasn't able to do this, I would ask you to email me and I would send you a link to it, and you really couldn't save it to your own chart list. You actually can do that now, so just click on that button. If you don't know how to get to this, just go to my blog, go to the articles page up here at the top, go to the Mindful Investor, and you'll see a link at the top to get to this chart list, and then you can save it again to your own login. Just wanted to hit on a couple quick themes that jump out as I was reviewing this over lunch today. Number one, breadth continues to be very positive. So as we're thinking about breadth, there are a lot of different ways to measure breadth. Equal weighted indexes like a value line, arithmetic index are one way to do it, which is very positive. You can do it based on volume reads. You can also do it based on advancers, decliners. And this across the board, large cap, mid cap, small cap. Then I have the NYSE here, the second down from the top. All four of those in the green, confirming further upside. So overall, the trend has remained fairly positive. I did want to point out this chart. This is the number of stocks on the New York Stock Exchange and then the NYSE at new 52-week highs. So every day, how many stocks are breaking to a new high for the year? And if you look at the bottom panel, this is the S&P 500, so about 500 stocks, and it's showing you what number at the peak in the last couple weeks when you really drove to new highs, almost 100, almost 1 in 5, about 80-some S&P names were doing a new high. That's still about 50, so about 10% of the S&P made a new high in the last couple days. This isn't quite updated for today yet. We'll have to process all the closing values and sort of recalculate this in a little while, but overall has been very, very positive. What's worth noting, and the reason why I think this is most telling, is look at the number of new lows. 0 for the last couple weeks and less than 5 going back here to the beginning of October. So for 2 straight months on the S&P 500, there have been a token number of stocks occasionally making new 52-week lows, but that's incredibly rare. And that supports the fact that overall the breadth is positive. A lot of stocks are participating in this. So even though we talk about narrow leadership and going into year end, there's usually this pattern where people sort of back off of the speculation, take their foot off the accelerator a little bit and get into some of the high-flying conservative names that have done well. Things like Microsoft, the FANG stocks, Apple, things that have been on a pretty solid run so that they can sort of window dress and make their portfolio look pretty stable. That usually happens, but so far the breadth characteristics aren't really supporting that. They're actually showing that on average stocks are overall pretty good. Now that can happen in the next couple of weeks, so I'll have to see how that actually plays out. But overall, that's sort of the environment we're in. I want to finish off our recap looking at the market dashboard on a sector basis. It's interesting to see that real estate is the number one sector today. So on a big update, you actually had REITs leading the way, followed by communication services and then technology. So comm services, tech makes sense in terms of leadership. Real estate is a bit of a head scratcher when you think of a new highs, closing at the highs, nice rally. You wouldn't normally think of real estate, and there's a bit of foreshadowing when we talk about some of our holiday sleepers. I think some of the real estate charts actually look fairly compelling here, which is kind of interesting. At the bottom of the list today, we had financials, we had utilities, and then the worst one was energy. None of these were really down more than a couple basis points, right? 0.02 or 0.03%. So overall, stocks in general holding up very, very nicely. In terms of the top-rated stocks out there, there are a number of names that if you're not familiar with, I would encourage you to look at the Scooter reports, look at the top stocks, and just see what groups these are in. There are a lot of semiconductors up here in the top 10, top 20 list, things like NVIDIA. And when stocks like NVIDIA are doing very well, the market tends to be doing pretty well also, right? Those don't tend to be in raging uptrends when the market's struggling. Stocks like NVIDIA, like AMD, these tend to do well when the market overall is doing well. But there's also some other names like Target and others that you're familiar with, but wouldn't have necessarily put in the top of the cream rising to the top. But there's some meaningful new highs happening there. In terms of the big jumps, you had things like ConAgra brand, CAG, with a huge gap up. This is the biggest gainer in the Scooter rankings today. So again, a bit of an adjustment to the stock price that comes up, but also things that you probably are not familiar with, like WAB, Wabtec. This is a stock that's actually in the industrials section, coming off of its 50-day moving average. So some interesting movers coming off of potential support. On the downside, you have something like Hess, some other energy stocks, MRO, Marathon Oil, still overall holding up very nicely, but just starting to roll over on a day that was essentially flat. Stocks that are selling off a little bit can be kind of painful, especially on a relative basis. So make sure you're taking a look over there and seeing what sort of names are popping up. That is our market recap for today. I wanted to transition to our mystery chart. And as you probably know, if this is your first time watching, you are not familiar with. Those of you that have watched have followed how we do the mystery chart. Essentially, I'm going to show you a chart here. I have blanked out the ticker and any identifying information and just tried to hide what it is. And the question to all of you is, what is this chart of? And you can answer, put your questions into the chat room, the Q&A right on the StockCharts TV screen. Let us know what you think this is. I'd encourage you to guess. There are no wrong answers. That's actually not true. There are plenty of wrong answers, but no bad answers. Take a shot and see what it is. I will give you a hint. This is a stock. This is an individual stock. It's not an ETF. It's not an ADR. It is a U.S. listed company, a U.S. listed stock. So take a guess, see what it is, and we'll come back later in the show, reveal the ticker, and talk about why it's an interesting chart to pay attention to. Our next segment is a new one called Holiday Sleepers, leading into the holiday period here at the end of the year. We're talking at StockCharts TV about how we're winding up the year, and a number of my fellow hosts are doing some year-end programming, some year-end discussions about what they're seeing in their different spaces. So I wanted to share with you 5 stocks that in my screening in the last couple days have sort of bubbled to the top of the heap of potential interesting candidates. And the reason why I put them in the sleeper category is they would not normally be the types of stocks I would expect to do well, or they have not been doing well up until this point. So outperformance is a bit of a stretch, but boy, if you could get in now, you're probably in a pretty good place. So let's go through the 5 of these very quickly. First off, I teased you in the introduction, Wabtec, WAB. This is a stock in the industrial space. It's a commercial vehicles name. It's up almost 2%, so a pretty good day today. And that's when it hopped up onto my radar earlier today. But it came up earlier in the week looking for stocks that had pulled back to the 50-day moving average. And you know, in general, if you look at, I was interviewed on a podcast a couple days ago and was asked about mean reversion versus trend following. And what I explained was most quantitative models for institutional money managers and hedge funds use a momentum factor. And the way you measure momentum is, say, a strong 1 year, or simplistically, a strong 1 year, a weak 1 month. So a pullback in the last month, but within the context of a longer term uptrend. And so I look for stocks that are pulling back to a rising 50-day moving average, and that usually surfaces names that kind of look like that. And this is why this kind of came up on my potential sleeper list. So has been in a pretty good uptrend. It tested and broke to new highs for the year a couple weeks ago and then sold off a little bit. So while the S&P overall has held up very nicely, this stock has actually pulled back. So a little bit of a differentiated chart, but you can see it's now pulled back to a rising 50-day moving average, a nice rally into the close today. Now, what's interesting is if you look at the RSI at the bottom, the RSI hit bottom around 40, and in a bullish phase, the RSI tends to find support around 40. Those tend to be the buyable pullbacks within a longer-term uptrend. If it breaks down through 40, that usually tells you it's more of a bearish phase, right? There are more lower lows potentially on the radar. So this is a stock that's bounced off support in the lower 60s a number of times, finally broke to new highs, has now pulled back, so you're getting in potentially at a more optimal level. Pulled back on a relative basis too, but that overall could be an interesting idea. So that's an interesting idea in the industrial sector. The next chart is IVZ. This is in financials. Now, a lot of the banks look a little different than this. And again, I'm always interested in stocks that look a little different. So a lot of the financial sector, especially the bigger names you're probably familiar with, look pretty solid, right? They've broken above resistance, breaking to new highs. JP Morgan is sort of the one that usually comes to mind when I'm thinking of this. Invesco, IVZ, is a little bit further down. This is one of the asset managers, so it's in the group with the others like Franklin Templeton and Franklin and so forth. This is one, though, that's just broken above its 200-day moving average. So it had found resistance at the 200-day first week in November, pulled back to the 50-day, now has rallied back above. So higher lows, higher highs, now swinging above those previous highs. Overall, the trend fairly positive on a relative basis, starting to improve, testing a new relative high for the last 4 months, potential upside back to those previous highs around 20 or even higher. So overall, setting up very nicely. And what's really interesting about Invesco is a really decent dividend yield, almost 7% dividend yield, which is not too bad compared to other places right now. The next 3 stocks have a similar theme. They're all in the real estate sector. We saw that REITs were up the most today out of the 11 S&P sector. Not surprising that a number of REITs actually surfaced up as potential long entry candidates because they've started to rotate above resistance. So AMT, American Towers, one of the tower names, had a nice run, pulled back, sort of this bull flag pattern of lower highs, lower lows after a nice run, has found support a number of times at the 200-day, now has broken back above resistance. In general, this tends to be halfway up a longer move. So setting up for much further upside then, we're going to go to VNO, which is Vornado Realty Trust. also breaking above resistance. This is almost a sort of cup and handle like sort of bottom, or even a head and shoulders type bottom here, broken above the neckline. Now continued pattern of higher highs, higher lows, not overextended yet. Pretty good supply area just further above, but pretty close to a nice breakout. And then CCI is Crown Castle. This is another one similar to Vornado that has rolled off of its 200-day moving average, broken above resistance. So I like a couple of these names that have corrected a little bit, pulled back to long-term support, and now appear to be rotating higher. It's interesting that a couple of those, 3 out of the 5, are in real estate, which is not sort of the juice you would expect if we're going to have an extended upside. But again, this is independent of what we're seeing elsewhere. This is just looking at the charts, and those are 5 that I think could be interesting candidates in the next couple weeks to the next couple months. Those are our 5 holiday sleepers for today. We're going to take a brief commercial break. We're going to be back looking at sector rotation. So I'll see you back here in a minute. Everyone, welcome back to the show. Thanks for joining us on The Final Bar. You can get to us at any time with questions and feedback at thefinalbar@stockcharts.com. We've done mailbag sessions, and we're probably going to do one tomorrow to wrap up the week. So please make sure you get your questions to us anytime. We love hearing your feedback on the show. But now we're going to go to our next segment, which is called Sector Setups. So what we like to do with a regular basis is look at the 11 S&P sectors, talk about some of those relative movements, and see how the sector rotation picture is changing. I thought it'd be really interesting to look at the sector movements leading into year end, right? So we looked at it a little while ago, and traditionally, again, this is using the RRG methodology. The 11 S&P sectors rotate around the S&P 500 right in the middle, and they tend to go in a clockwise motion. If you're not too familiar with the RRG discipline, 2 things you can do. Number 1, look at the chart school articles where you can learn more about it. Also, my colleague, Julius DeKempener, does a fantastic show on sector rotation every week on StockCharts. Check his out, and also go to our YouTube channel. You can see some of his previous episodes. He does a great job of leveraging this tool much further than I can get into on the Final Bar. But this is looking at a weekly review. This is what I tend to do if I want to get a good sort of long-term view about sector rotation. And the rotation we've seen, if I put this in motion, we'll rewind a little bit. Just going to zoom out just a touch. So this is what we looked at when the market bottomed out April, May, June into July. You can see going into this next phase of the rally, this was August, September, when we see the defensive sectors rotating higher. So utilities, real estate, staples, the top 3. Pulled back a little bit going into October, but then look at how all the defense is rotating lower as the market's accelerating to new highs. We see things like tech, financials, industrials, even materials rotating in the leading quadrant. As we continue to where we're at now, we continue to see strength long-term from technology, from financials, from healthcare. So the rotation that's happened is we've seen this general rotation away from the real estate leadership, the yield plays that had gotten a lot of investors in during the summer months for great income for sure. But as the market has sort of gone on to this next leg higher, this next tactical bull continuing to new highs, we've seen the rotation away from defense. So I think the big question leading into next year is, do we continue to see a rotation? Do we start to see a little bit of a softening of the market rally? Do we see defensive sectors rotate higher? Or even do we drift higher with some of the defense like real estate, which is setting up very, very nicely, as we saw in some of those charts recently with Crown Castle and VNO and others. Is that the rotation that we see? We see continued strength, but improvement in some of the defensive sectors. That's the real question we would have to answer. Other themes that I would point out on the relative rotation graph, look how both of the consumer sectors are here in the lagging quadrant. So the XLY is consumer discretionary, the XLP is consumer staples. They've been moving in lockstep. They usually don't. They're usually much more differentiated, but they're both sort of in that lagging quadrant. So sort of left out of the picture as financials, tech, healthcare have continued to improve. It's interesting that technology is just starting to hook lower. It's just the beginning, but in general, you want things anywhere on the graph that are hooking to the northeast. That's better than going to the Southwest. That means a period of relative weakness or lessening momentum. And that's potentially one of the things I'm seeing with technology that I'll certainly want to look at going down. Now, again, what's interesting is the charts in technology can continue to hold up just fine on an absolute basis. This is based purely on relative movement. So if it's underperforming, it's going to rotate lower, even if the price charts are holding up just fine, if it's holding above support levels. I want to look just very quickly at the daily RRG just to get more of a short-term tactical view. Here you can see where real estate has been so beaten down, and I think these up bars we're just looking at could just be the beginning of an improvement. We'll have to see if that continues to pan out, but not quite yet. Technology on a short-term tactical basis actually rotated back up along with financials, and healthcare has continued to be the strongest of the sectors looking at the short-term basis, but again, rotating now down to the Southwest, so suggesting short-term a little relative weakness. Energy, really interestingly, is almost to the leading quadrant, again, on the short-term read. So in the short term, energy actually improving almost to the leading quadrant. Looking back at the weekly, we can see energy has hooked back up, sort of going to the east, which means it's improving on a relative basis. So it's still such an outlier on a relative basis. And again, the long-term charts of energy are so bad on a relative basis. But if those continue to improve, if you continue to see improvement, that's an area I would certainly look for, because so many people are not there and do not expect that to be a place to be. Let's look at the charts of the 11 S&P sectors. I like to use the candle glance pages for this, just to look across the board what sort of patterns we're seeing. I mean, what immediately jumps off the page is how all of these, for the most part, are pretty solid. There are very few of these charts that look bad. They either look exceptionally good to extended, like healthcare, like staples, like XLC, communication services, like materials. These are all things that are broken to new highs, and potentially like technology fairly extended from where we had been. Or they're things like industrials that are pulling back a little bit, utilities pulling back a little bit, real estate pulling back to the 200-day moving average, all pretty fairly positive configuration, nothing really negative. So none of the 11 sectors on a price basis looking too bad. But if you look at something like real estate, this is where the relative picture is so important. This is a sector that was up 15% on a relative basis for the last year, and now down to flat, essentially, up almost 1% for the year. But again, this is one of the more actionable pullbacks that I'm seeing across the board at the 11 S&P sector. So a potential interesting setup here. I'd mentioned before about technology and healthcare, and I think what concerns me with one of these, we don't have the RSI on there, but if I did, a lot of these are showing some potential extension, and something like the XLV, the RSI, is actually sloping downwards. We can see that very easily on this chart. So you can see that the RSI, as the price is going to new highs, the RSI not quite getting up there. If it gets above 80, though, this tells you potential further upside because it's extremely overbought. So it's right at a really key level on the XLV for sure. I'd be paying attention to that one. Those are your sector setups for today. And again, a lot of interesting movements. I think the real big theme is whether those defensive sectors, in particular real estate, continue to rally off support, potentially emerge as relative strength. Let's get back to the mystery chart. Could you guess what it is? We have, I'm getting in my ear the producer saying two guesses: Visa, great guess, and BAC was the second one. Bank of America, two financial guesses, although Visa's in technology. So interesting, you both picked up on that sort of general strength in the chart. And as always, team final bar impressing. This is the chart of Visa. So what's interesting about this, a lot of people think of Visa, it's sort of on that fintech sort of weird place where it could be considered a financial, could be considered a technology stock, and I've seen people group them. It's almost in its own category, these types of names. But this is a stock that's done very, very well on a price basis. And why I think it's so interesting is it's setting up so beautifully with this huge rounding base pattern. So the stock rallied through much of the year. You can see on a relative basis, if we start the clock just before the market low last Christmas Eve, you can see at one point it was up almost 18% relative to the S&P. So a huge outperformer, and then gave about half of that back in the months of October, August, really September is when it really gave most of that back, right? In 1 month, all of a sudden, pulled back significantly when the market was coming out of the low of the first week in August. So didn't really recover when other stocks did. Since then, it's been a market performer, so sort of sideways since then. So it's held up very well. It hasn't underperformed, but it hasn't really gained a whole lot. What's interesting is while things like the S&P, while things like healthcare, a lot of tech feel very extended, right? There's sort of, look back at that chart of the XLV, things that are so extended, that have rallied so well, that have outperformed so well, that are also very overbought because they've gone so high so quickly. Something like Visa is nowhere near that, right? Nowhere near overbought. The RSI is still, below 65, so it's not quite to the overbought level. It's testing a key resistance level instead of being way beyond it. So at a time when a market is strong and arguably potentially extended, if you still like the long-term play, it's interesting to look for things that are more actionable. And you can do it in a couple different ways. One is look for stocks that are breaking above a key level. So something like Visa testing resistance. You could also look for things that are pulling back to resistance. Maybe that's some of the real estate names that I highlighted, or things that have sort of earlier on in that trend well below a resistance level. But I think Visa fits into that category of stocks that are potentially at a meaningful point here. Certainly a meaningful resistance level to pay attention to. So this is Visa. The other name, if you're looking at Visa, tends to be MasterCard. These two charts look very, very similar. You can see, though, that the characteristics are just different enough. So MasterCard has actually broken above resistance levels so far. Also, just recently overbought on the last week when it rallied up to, broke above the new highs, pulled back just in the last couple of days, but overall, holding up very well. You can see on a relative basis, MasterCard has held up much better than Visa. So still up on the last year, 23% relative to the S&P 500. And then other names, you start getting into some really different sort of things, something like Square, sort of other sort of fintech payment types of stocks. And again, you can see why Visa and MasterCard, I think, are differentiated relative to some of these others. It's interesting with Square, though, that we've pulled back to the 50-day. It's still below a declining 200-day moving average, so not my favorite sort of setup, but I like stocks that are pulling back to a 50-day. Always interesting to keep an eye on them. So fantastic guess. I think we're pretty close to 100% accuracy for Team Final Bar, so well done. Thank you for your guesses. Please, we'll keep doing the mystery chart segments in the future, but for now, we have to wrap the show with the 3 in 3. So the goal at the end of every show is to highlight 3 charts in 3 minutes. These are charts that should be on your radar. Number 1 is commodities. We didn't get to talk about commodities too much. I was interviewed yesterday on a show called Forex Analytics. Dale Pinkert was the host, who's had a great career in trading in New York. Had a conversation about a number of things. We talked a little bit about the commodity complex and the potential for commodities to rally, and not just commodities in general, looking at energy, looking at gold, metals, silver, other things. And this is one of the charts I was looking at as preparing for that discussion. The GSG, which is the GSCI commodity index, and there are different ways, the CRB and others. This is the one I tend to look at. You can see it's broken, from a period of distribution, breaking above trendline resistance to test a resistance level during a consolidation period, and now potentially just breaking above resistance. And if that breaks, if you use the traditional measurement, this actually measures pretty good, going up to the previous highs back here around 18 or 19, which would be a huge up move in commodities if that actually would follow through. But it's very interesting, this chart right at resistance, something I would certainly keep an eye on. The second one is looking at the S&P with new highs and new lows. We talked about this earlier in the market recap segment. I think what's very interesting, number 1, is the influx of new highs over the last week. So you can see that, 10 to 20% of the S&P 500 has hit a new high every day in the last week. Pretty meaningful, but also the fact that there's absence of new lows, right? Not a lot of stocks making new lows for a while, and in the last couple of weeks, essentially zero S&P names. So it's certainly a very broad rally, and looking at the breadth as well, we can see the overall strength that we've looked at. The final chart for the 3 in 3 today is the AAII bull-bear spread. So this is the American Association of Individual Investors asking individual investors, are you bullish, bearish, or neutral for the next 6 months? And the respondents this week really tilted bullish in a big way, in a huge move, following through from the big move last week. So almost 45% of respondents said they were bullish. This is getting to some of the higher levels that we've certainly seen in the last 2 years. The last time we've been this high really is, for a meaningful way, is the last of 2017, beginning of 2018. Tested it again back in July, also here in October of last year. But overall holding up very nicely. And look at the spread from bullish to bearish. This is the widest it's been in quite a long time. So a lot of tilting more to the bullish side. And folks, that is our show for today on a beautiful Thursday winter here in Redmond, Washington. I want to thank you for watching The Final Bar. Please check out our YouTube channel. We have all of our old shows, including 2 fantastic interviews this week from Roman Bogomazov and Samantha LeDuc, which you're going to want to check out. Keep your questions coming. The Final Bar at StockCharts.com. For StockCharts, I'm Dave Keller. Have a good night.